Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. And so here I am recording this on the evening of Friday, May 10th, after the market has closed and GameStop closed at a price of $17.46, being down about 3% on the day, but over the course of the month so far, the stock price is up about 57%, so looking pretty great. But there are a couple things I did want to go over. I do think that there might be some great dip buying opportunities next week, and so I did just want to go over my rationale for that. And so here, looking at the chart, and in last week's video, I did go over $15 that I thought that would be a good level to be holding as support. And I also went over $18 here, marked by the orange line. And, it does look like $15 did hold up as support. We got some wicks below. And actually, on this day, on May 6th, I had somebody in the comments trash talking me. And it was pretty funny because they clearly were not buying the dip here, which I suggested, we could be reclaiming it. And so we did do that. We actually formed what looks like a bull flag with this consolidation above $15. These wicks to the upside were a little bit concerning, but then we did get a break on Thursday, closing at a price of $18.01, so looking pretty good there. And then on Friday, we did get a continuation to the upside, hitting a high of $20.20. So pretty great there. But unfortunately, we did pull back and we did close below $18 a share. And also, if we do look at the shape of this candle or, the pattern that we're seeing for the day, that does look like a topping tail. And the reason why I say that is because there is this big wick to the upside, and the price did close in the bottom quarter of trading for the day. So that does suggest that the top could be in for the time being. And that is not to say that I am bearish, that I think that the price is going back down to $9.95, the lows over here. But what I do think is that price might be pulling back, finding support maybe around $16.50, maybe around $15 a share. And I do think that would be an excellent dip buying opportunity before the next leg up. And I do think it is good to, not be exhausting the buys up here when if price does return to a lower level to find support to reclaim its footing. I think it's a great time to then be accumulating more shares at a lower price, so then that can rally it back up rather than it just fade from the top down. And so some levels that we might want to be paying attention to are going to be based on a Fibonacci retracement that I'm going to do here from the low of April 16th, which was $9.95, and then coming up to the high here, hit today on Friday of $20.20. And so from this Fibonacci retracement, we can see some levels that do stand out and also do correspond with other levels that I have drawn up here. And so one level is the 236 at a price of $17.78. Unfortunately, we did close below that today, but it is possible we can reclaim that early next week and then start moving higher. But if we do go lower, the 382 is at a price of $16.28, does look like it corresponds with all of this consolidation over here. And if I do throw up the volume profile, we actually do see a pretty nice volume shelf with this lip here sticking out that does suggest we might be finding support around that range. Here at the top of the lip at around $17.10. The base of it around 1663, and then we do have, of course, this level at 1628, so maybe we find some support there. But if not, the shelf does look like it tapers off, tapers back in around $15 a share, and the 50% level from the Fibonacci is at $15.07. So I feel that price will be pulling back to that level. And I don't think that's a bad thing. I think that would be great for, more discounted shares before the next rally up likely surpassing 2020. But, who knows? If it does pull back to $15, maybe it goes a little bit lower. The 618 is at 1387. I feel like that's pretty unlikely considering, just the psychological level, thinking in, fives, tens, 15. And so I do think that will be holding up as support, also corresponding with the 50% retracement does make sense because I think that there is going to continue to be a lot of momentum in GameStop. But in order for that to be sustainable, I think we need to be taking our steps up. And with that, we went a little bit too high on Friday, but I think that we will be able to be surpassing the high of 2020 in the next week or two, because Thursdays and Fridays have been pretty remarkable for the stock. As we did see last Friday, the price went up almost 30%, 29.08% on the day. Maybe we'll be seeing that next Friday. And so, that's what I'm looking forward to. And, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.